they say, well, prove to me that your system works, that it can generate these returns, that it's secure. And so you need to have this track record. And then to get the track record, it's the classical chicken and egg problem.
Welcome to the Swisspreneur Show, a podcast about startup stories and learnings from experienced entrepreneurs. Here's your host, Sylvan.
Benedikt, very well welcome to the Swisspreneur Show. It's a pleasure to have you here today.
Pleasure to be here. Thank you.
You're the co-founder and co-CEO at FQX, the hub for tokenized debt. Before we talk about your impressive story and your startup, I actually want to start with your personal background. You are a lawyer who specializes in blockchain law. So first of all, I'm interested to learn more what actually drew you into that very specific field.
It's an interesting story. I studied law in the University of Zurich, and I always had a knack for, I think, the way financial markets work, because I think it's one of the most complex systems that humans have created, with very bad things and bad sides and also good sides, in a way that it can, enable human innovation. And so I was always deeply interested in that. After law school, I then I had the crazy idea to go work at a private bank. And that really was not the place where I would become, I think, really happy. And around that time, that was around 2016, I did my bar exam, and Switzerland started to become really this hub for fintech and blockchain technology. So the Ethereum Foundation just moved to Switzerland. Other crypto foundations came here. And then I really saw, this completely new type of financial people in Switzerland, people who are really interested in financial markets, but are doing so from a more ideological perspective. They want to change things. And also some very crazy people. And I was very drawn by that. And so I started, getting into blockchain from a legal perspective. And started working at Lücke, one of Switzerland's first crypto exchanges.
Yeah, so this is a great summary, right? You basically had your initial interest, but then also the timing, the development in the market that came together, which actually draw your attention into that space. You mentioned Lücke, where you then did your first adventures in the crypto space from a job perspective. What was actually that appealed to you so much about blockchain or crypto specifically? What was this spark that you said, hey, this is where I want to spend my time?
It spoke to me on intellectual level. It spoke to me on an ideological level. And that, Lücke came to market, many other blockchain companies around the same time, really wanting to change how people get access to finance. And they often threw in the word democratizing finance, which is, a controversial term in that sense. But I think many of them meant it. So they did really think, we can use this technology to emancipate people, to create a more level playing field financial system, and also create, destigmatize the way financial transactions can work. So, you don't have to be a mean banker just taking profit for yourself, in a sense. So you can use these blockchain systems to do financial transactions. But then, of course, things turned out differently oftentimes than they are. So one of the first use cases really was people wanted to unbank or bank the unbanked. That was one of the big, there was also a company called Monetas in Switzerland back around the time. But this turned out to be much more difficult and complex, right? And then other use cases of blockchain technology emerged and came to public use.
Fantastic. You then also co-founded Lexon Digital, the first human-readable smart contract language. But the project only lasted for about 2 years. So what went wrong, or what were the learnings that you took away from that project?
Lexon was very interesting. Some of the people who started it are still working on it, more on a research basis. I think the learnings I took is, I think there's two main learnings. One is just throwing a bunch of very smart people into one room doesn't guarantee you're going to build a great product. Because the people involved were all like really, really smart, inspiring people that I met. Many of them also blockchain lawyers that I met as part of this global blockchain circus. I met the original co-founders actually on a blockchain conference in Bermuda, where I was kind of just in my first month in Lykke invited to participate, 2017. So that's the first learning, just because you have really, really, I would say, like mathematically smart people doesn't make you, just build a great product. And the other one is building a product on top of an innovation that still isn't market ready is very difficult. So Lexon was about building a smart contract programming language for lawyers, so that a lawyer, or basically anybody, a layman, could write in simple English a smart contract that would then be compiled into a blockchain smart contract code. And I think the idea is still very compelling, but so the point is, smart contracts back then and still now are not really, really mass market ready yet. And so building an innovation on top of something which is still in its infancy is very difficult.
Talking about the timing again, right?
Exactly.
So
Always about timing.
You cannot really influence it, but you can try to understand it and ride the wave, so to speak, as one of our interview guests once said. You then were not discouraged by that experience, because you then started and went on to found your own company. So I also wonder, we know where your interest in the blockchain technology comes from, but I also wonder, where does your entrepreneurial drive come from? Do you have any role models in the family or anyone else who inspired you to become an entrepreneur?
Yeah, I think we, some way or the other, actually, all of my my two brothers, as well as my dad, was an entrepreneur. Yeah. So I think it was always in the family. This very strong, I think, urge to, challenge things the way they are. Also, maybe not having the easiest time being told what to do, rather trying to do your own things and do it your own way. And so that's why I think that's where this entrepreneurial spirit comes from, really trying to build something and, needing, I would say, this independence or freedom to create.
But it doesn't seem that this was always the clear path for you, because you had the detour to the private bank, right? Yeah. When did you realize that the entrepreneurial path really is the right way for you to go?
So, I mean, the bank detour for me was really just, I did my master's in law, and I just wanted to have any job, just actually start working, earning my own money. And I think for me, then working at Lykke, where, I was able to learn a lot. There were really, really inspiring people behind it. I realized I don't just want to be a lawyer. And, it's fine being a lawyer. There are some people who are really good at it. Sure. But in terms of my skill set, it didn't really, I guess, fully reflect, I would say, my horizon or what I can do or what I'm good at. Mm-hmm. And I felt like I actually want to be involved in the business decisions. I want to be involved in strategic decisions. And so in order to do this, and really to, I guess, apply my skill set in the best way, which is I'm an all-rounder guy. I'm fairly okay at many things, but I'm barely an expert at anything particular. Mm-hmm. And so that's when it dawned on me really that, building something with other people together is what probably best reflects also my skill set.
Yeah, what you just described sounds to me like the founder's job description. Yeah. So you then founded FQX in 2019. We talked about timing before. Mm-hmm. So why was 2019 the right timing for you to start your own blockchain company?
So there are a number of factors coming together. I think, first of all, I felt ready because with Lexon, I was just kind of pulled in. We had a very strong main founder kind of. Mm-hmm. And I was ready. I felt I had the network, the experience. And together with the other co-founders, the vision for the product. And there were other things coming together as well. So we are building, an infrastructure and platform for tokenized debt. This means you have to be able to create native blockchain financial assets which are recognized in the legal world. And with this, and it's actually very non-trivial, in some countries, these promises or promissory notes or bonds or commercial papers are still paper-based. And there's very clear descriptions what you have to do in order to bring it in an electronic form or on a blockchain. So at the time, 2019, some interesting things were happening. There were more states and nations starting legislation that would allow electronic promissory notes, for example, for the first time. Like before 1,000 years, this instrument was paper-based, and then it was, okay, we can now do it on a blockchain. And so that's also one of the factors that led us to then start it.
I mean, that's certainly a game changer, right? Yeah. Because suddenly what you try to achieve becomes also legally possible.
Yeah, correct.
That just opens all the gates.
Yeah.
You mentioned co-founders. You co-founded a company with 4 people in total, so you included. Where do you actually meet your co-founders? What was your history, or why were you the right team?
It was Stefan, the other co-founder, and then co-CEO. Him and I, we go way back. We went to law school together, actually, so more than 12 years ago now. So there's this very long and deep trust relationship from there. We also did a academic publication together about smart contracts from a Swiss law perspective in 2017. And then actually the Frank I met also as part of discussions with Lexon. So this was this kind of Berlin blockchain circus. And then Philip had met Frank in Germany as well. So this all this kind of came together. And it was nice because it's a combination you usually don't really get, because Frank and Philip are really senior guys with a lot of industry experience, and Stefan and I, as younger blockchain lawyers. So I think that is a pretty unique combination. Yeah.
Again, timing. You can't it seems to be a red thing, a red line throughout our conversation.
Yeah.
So now, of course, we talked about how your company was born, but imagine our listeners right now that they don't have a clue about what you're exactly doing. They might not be very familiar with the blockchain world. So how would you explain your product, your service, basically, the eNote, to someone who has never heard about that before?
So the eNote is the most simple form of a financing instrument you can imagine. So in order to get money, debt, liquidity, people enter into all kinds of legal arrangements. So you either go to a bank, you get a loan, you have a very complex and long loan agreement. Then if you're a larger company and you want to get liquidity, you say, I'm actually not just getting money from the bank, I'm getting money from the public investors or many investors, and I issue a bond, which again, takes a prospectus to do. It can cost incredible sums, and it takes a long time to set this up. Some of these instruments still today, whether it's the loan agreement or it's the bond, which is called a security, or a Wertpapier or Effekte, are still paper-based in some jurisdictions, and it's really not standardized across the globe. So what we do is we say, by bringing together legal engineering and blockchain technology, we generate, or we create, the most simple and standardized debt instruments with which you can do all of the above. You can say, hey, this is between two parties who just want to exchange liquidity between each other, so a peer-to-peer loan. But you can also say, actually, rather than just having one eNote between two people reflecting this debt arrangement, we can have 100 eNotes, and then basically you have a bond. If it's below 1 year, it's called a commercial paper. So the eNote really is an enforceable debt instrument, which says, I owe you a certain amount of liquidity at a certain time.
That sounds very modularly. So basically, you can really create almost any use case that you want. Who are your typical users of that service?
It is extremely modular, and you can basically reflect any financing purpose with this instrument that you want. And this also is a challenge because, as we said, the potential breadth of use cases it's very big. So we are focusing on companies from the digital asset space as issuers. So what we do is a B2B infrastructure, right? We're not targeting retail as liquidity providers, and we're not targeting retail so it's not consumer loan anything. So any company that wants to get liquidity technically can use it, but the focus is on companies from the Web3 space.
Okay.
So this could be crypto foundations, this could be market makers from the crypto space, this can be crypto exchanges, etc. And because many of them, they currently don't really have access to the proper banking system. Banks have excluded them for the past years for various reasons. Some of them were just because they said, hey, these guys, they don't have their KYC AML really figured out. Others were maybe less justified, because they were threatened by what they do. And so we want to build a bridge between these companies from the Web3 blockchain space to the more traditional financial space, so that traditional financial investors can actually provide liquidity to these companies. And with this, we really believe we can, contribute to more stability in this new financial system that is being built.
Right. And why is the Web3 focus the right focus for you? Are these companies just more aware of the possibilities that you offer them on the blockchain and therefore also more educated or more mature in that way? Is that the main reason?
I think it's pretty well run up in terms of USPs. By bringing the instruments on the blockchain, for example, by doing an on-chain bond issuance, not only can you just digitize it, because that's, you can get rid of paper, you can get rid of some manual processes, but you can also rearrange all the parties that are part of this transaction, in a sense. So, this really has the potential to disintermediate. So, whereas in traditional world, for bond issuance, you need, an issuer agent, an arranger, paying agent. You need 5 to 6 different financial intermediaries. Yeah. And the blockchain technology can actually, and this is really the amazing thing, can replace some of these roles by technology itself. So rather than, for example, having an escrow agent, let's say if you want to securitize your bond transaction, the smart contract can fulfill this role. So you have a piece of code fulfilling this role. And that's really where I think the big emancipatory potential comes from. So going back to this, what I'm saying is the Web3 companies understand this. They're more educated in this, and they have less, I would say, a very traditional company building industry goods. They don't have a lot of touch points with blockchain technology. Maybe they're a little bit scared of it. Right, yeah. But it's the blockchain companies that know it, that know the benefits of the technology. And that goes back to the original kind of vision that we talked about in the beginning. They have been excluded from traditional financial services. Yeah. So that's why if you provide them with additional sources of liquidity, they're very interested in that. And we've seen with the whole kind of CeFi, DeFi meltdown in the past few months, how very unhealthy it is, because they were just they were borrowing and lending to each other.
Yeah, right.
And we need to stop this, right?
Yeah. So there's also a bigger need that you fulfill there, obviously, because they have limited access to other alternatives. One thing that really got my attention, what you just described before, the different parties involved in the traditional system. With your technology, you have a leverage. You're way more efficient, which also allows you to be much cheaper, I assume, than the traditional way. Now, my question here is, with these different parties that you have in the traditional system, right, that can also be sort of a risk distribution that you lower the risk. Is with your setup or your system, do you also face any drawbacks or any higher risk compared to the traditional setup?
The risk is distributed differently, certainly. What we've seen is really the big difference is just having the title side. So the debt instrument itself. Let's say you have your loan digital tokenized or you have your bond tokenized. That's one thing. But then also having the payment side. So in a simple transaction, I'm an investor. I give you a loan, and you give me this eNote, which I then hold as this debt instrument. The big difference is once you also do the payment side on chain, because then it's really delivery versus payment. You get the token against the payment, and the payment side is administered by smart contracts. And so that's where then a lot of effort comes to making sure that the smart contract works. Because rather than in the traditional financial system, if you send the money to a wrong address, usually you have a legal right to get it back. On the blockchain, if you send the stable coins, for example, USDC, to a wrong address, you may never get them back. Right. And that's why a lot of emphasis goes into ensuring this particularly. Yeah. So the risks are different. I still think they, given how much more efficient the transactions can be, and you can lower transaction costs tremendously, you can make it cheaper, it's much more quick. There's still so much, many things speaking in favor of it.
Right, yeah. And one thing, you basically also bring two different parties together, or even more parties than just two together. You have the corporate borrowers, but you also have the institutional users. Which side do you focus on from a business model or acquisition perspective? Is one side more important than the other, or needs a bit more push from your side to get onboarded?
It also always depends on kind of the broader, wider market environment. It's easy to find issuers, borrowers. Because if you can provide them with new sources of liquidity, at a similar cost, they're even willing to switch systems. Or a slightly lower cost, but more efficiently, they're very interested in this. So that's why the biggest challenge really is getting the liquidity side. Because for these guys, there's a lot of lock-in effects to the systems they currently use. And there's these track record biases, right? So an investor who currently already invests in fixed income instruments or in bonds, and now you want to say to them, hey, you can also invest in these Web3 company bonds or short-term debt instruments. They say, well, prove to me that your system works, that it can generate these returns, that it's secure. And so you need to have this track record. And then to get the track record, it's the classical chicken and egg problem. So you need to have innovative investors who really see the opportunity here. That you can say, well, by lowering the transaction costs so dramatically, actually enabling new markets. So these are new transactions which haven't been taken place. We're going to go live with a really kind of pioneering transaction where a crypto foundation will issue a debt security on a digital asset exchange to get additional liquidity, and we're going to facilitate this. So this is going to be really exciting. So keep look out for this. It should be released in the next few weeks. But this needs an innovative investor. That's why we're focusing on the investor side on digital asset investors. Okay. So those who are still traditional investors but have some exposure to digital assets. They know how to deal with the infrastructure. They have interacted with a wallet before. Yeah.
Sure. So you don't have to do too much education there too.
Yeah.
You mentioned an important word. It's also about building trust, right? I mean, you work with traditional, but also with the new kids on the block, so to speak, in the financial sector. So how do you actually build trust around your technology and your offering? Because the chicken and egg problem, that's a very difficult challenge to solve.
Yep. Absolutely. So we build trust in a variety of ways. On the one hand, by, let's say, the strength of our team, because our instrument, our system works because it has a very strong legal framework around it. And this really differentiates us from most other blockchain companies or a lot of DeFi plays, basically just very consciously violating regulatory law around the globe. Most of these offerings are clearly securities, no matter where you use it. And people just have kind of, denied that. So that's where I think the first layer of trust comes from. People trust that we are, 3 of our 4 co-founders are lawyers. We have many more excellent advisors, that we know what we're doing and we can build this. But then the other layer of trust comes from the technology, where you say, okay, well, this is a technology stack that you use that I can trust. We can audit the smart contracts, where you can also say, well, this has been audited. It's going to perform as expected. And then I would say the third layer, and this really is, where we're, I would say, a more conservative blockchain startup. For us, it's not about, decentralizing everything. It's not about DeFi to the max. We know that even in a decentralized financial system that we're building towards, parties will always be willing to pay an intermediary for providing trust. So that's why also banks, they will definitely have a role in the future financial system. I think it's going to look different than what it looks like today. So a bank like Credit Suisse, which currently is involved in many steps of a transaction, from providing custody services, providing distribution of an asset, providing the liquidity, etc. Maybe will be involved in less of these steps, and also being involved in the payment. So that's one aspect. And so that's why, and that's the third point of layer of trust, is our partners, those guys that we work with, right? So because we're a young startup, we've seen already the big difference it made starting to work with the Swiss Stock Exchange. They are an investor in FQX, and we're also in a partnership with their digital asset exchange, SDX. And you can really tell, this makes a difference for traditional financial institutions that say, hey, wow, you guys are working with them. We don't know FQX, but we know these guys. So if you're working with them, this means you're serious.
I think these are some great lessons that you just shared here, right? So it already starts with the co-founding team, basically. If you have some senior people aboard, that helps you to build trust. And then if you don't have the track record yet, because we all have to start somewhere, right?
Exactly.
Work with partnerships that you can convince to partner up with you, even if it's just a brand play. If you have a big brand like the Swiss Stock Exchange, that's going to add a tremendous amount of trust.
Absolutely.
And then the rest will follow if you can survive long enough to actually make it work and make it happen.
Absolutely.
Now, you recently won the Swiss FinTech Award. You have also raised a significant amount of money, more than 6.7 million in funding so far. What is next for FQX? What are your plans for the near future?
For us, it's really about now taking the next step of evolution in our product vision, where we've built an infrastructure that allows people to issue tokenized debt global level. And we want to take this one step further. And we're going to launch then a kind of new product iteration with new features, functionalities, and really fulfilling the vision of bringing borrowers and investors closer together, so that we can actually have issuer of a on-chain commercial paper or on-chain short-term bond, and they issue the asset directly into the wallet of the investor. And that's really what we believe will be the future of the financial system. So that's going to be the next big step. We're currently closing a financing round that will allow us to get to this next step. And we'll see what's going to happen from there.
With the current environment that we're in, to fundraise, it's not the easiest environment to do so. Also, especially if you look at the crypto market, where a lot of value has been lost. Yeah. Do you feel that as a fundraising startup? Is it more challenging for you to raise funds now than before?
Oh, definitely. Yeah. I think the market environment really flip-flopped compared to like a half a year ago. So there's much less liquidity in the VC market. And VCs have become much more conservative. So whereas before, it was much more easy to get funding based on a compelling vision, They've just turned more conservative now, looking more at data, looking more at traction, which I think is a fair market correction that was needed. We've seen the cases with Klarna and, super overvalued startups and, just raising them at, 90% less value than they raised the last round. So the correction was needed, I think also a lot in the later stage phases. And so in the end, I think we will all profit from this. But it definitely makes fundraising a bit more challenging.
Right. And one last question before I have some shorter questions for you prepared. With your setup, you do things quite differently compared to the traditional financial intermediaries. However, these might be the companies in the future that might acquire you or might be interested in your technology. Do you think that this is even a strategic play that they could pull off because you work quite differently from the way that they use to work?
So how do you mean strategic play we can pull off?
Like that they could acquire you despite the different ways of operating, or is it too much of a difference?
I actually think, this is something that we've seen now change a venturing philosophy of larger companies or larger banks, financial institutions. They realize, or their innovation people realize, that they are too slow, too much inertia within the institution, so that if they actually start working with the startups too early, they're going to kill it. They're going to kill the project. Just integrating the product into the banking, the core banking system that they have, it can take years, etc. So some of them have realized, actually, maybe it's better to get a stake in this company and let the startup run independently and separately. And then once it reaches a certain stage of maturity, then you could actually, do an acquisition. If you have a very efficiently built startup, and then you have your traditional bank or stock exchange infrastructure. But yeah, we're definitely open to that. Given that we said, in order to really scale, we need to have strongly trusted partners. And in the end, we believe we can also change the financial system by building this technology, building this infrastructure. And, if then big traditional players start using this technology and maybe own partially part of it, that's, actually what we want to do.
Right. So I'm now even more curious to wait for the announcement of your next fundraising round to see who's amongst the investors. So to wrap up today's conversation, we have prepared some rapid fire questions for you. So I either give you a short question or different options to choose from.
Okay.
And you have to answer in one sentence. You ready?
Okay.
First one, Ethereum or Bitcoin?
Ethereum.
Why? Because of the legal aspect to it?
It's just, I think, more fascinating.
Okay. Coffee or tea?
Coffee.
Have you ever regretted an investment that you've made?
Yes.
Which one?
There
If you're open to disclose.
was an ICO in Switzerland I participated in.
Okay.
Like many, we regretted it.
Yeah.
Let's put it like that.
That's part of the game, I guess. Early bird or night owl?
I guess because our investors are called early bird, I'm been in a conflict situation here. No, I'm rather a night owl.
Beer or wine?
Beer.
And the last one, lawyer or entrepreneur?
Entrepreneur.
Clear choice for you. Benedikt, thank you so much for stopping by. Lots of success and all the best with FKX and whatever you'll tackle in the future.
Thank you so
for
much.
coming.
Thank you.
We hope you enjoyed today's episode. If you did, you can support us by rating our show on Apple Podcasts. This way, we can reach an ever-growing number of aspiring entrepreneurs.